All right, we are connected for the Tuesday edition of the news update. And as always, looking forward to connecting and sharing my 2 cents on a variety of subject matter. And it looks like the breakout continues. We got platinum making some moves, some 14-year moves. And so literally we're witnessing what I consider to be a quadruple market metal surge. At the same time, we got a narrative around reserve management, aka QE, and lots of other things worth touching on. But anyway, before I move forward, welcome to the live stream. And I need to make sure I'm connecting and flowing on all cylinders here. So if you don't mind, let me know in the chat if you can hear me. Let me know if the visuals is coming in. And then also, it is a lot warmer here in the Metro Detroit area. And so it's a sunny day here in Metro Detroit. And let me just share with you what I'm experiencing here. It's 25 degrees and the sun is shining, baby. And it's time to make some noise. But anyway, hope everyone's doing well. Just trying to open up with a little bit of laughter, a little bit of, just high energy this morning. I'm feeling pretty good. And just watching things unfold in real time is somewhat exciting when you think that you have I guess, a well-rounded approach as well as perspective on things. I'm not, too high, too low, just right where I need to be. So anyway, I hope you guys are doing well and feeling the same way. So let me check and make sure I'm flowing, and then we're going to jump right into it. I have lots of things to touch on, and one subject in particular has to do with the refund checks and Besant. I got a little, article about Besant talking about the excitement that they have around refund checks getting out sooner, and how $1,000 or $2,000 is going to really make a difference. But if you take that 1,000, 2,000 of what we're being told is coming, give or take per household, whatever. But if you price in or factor in how much weight you can actually buy with that, it's good to say you're going to be very surprised. So I got a graph to show you that as well. So anyway, let's jump into it. For those who have not as of yet, make sure you subscribe, hit the bell notification, and also hit that like button. Show your boy some love. Show some support for the channel. I appreciate your time, energy, and effort. And I see people popping in as usual, and so I appreciate you. We got Beer Light Broker. We got Nell, Shan, Nasty, Faith. It's a couple other people here popping in, man. Appreciate you. So let's not waste any time. I want to just jump right into market activity. Look at some of the markets and share my 2 cents there. Then I have 5, 6, 7 headlines that I want to make sure I get to so that I get everything covered. And we're going to make the most of this session here. So let's just jump right into it. So as always, man, looks like we are off to the races again. And it's early morning, and the Crimex hasn't kicked in yet, but just silver doing its thing, 63.54, coming off an all-time high yesterday of 64 plus. And then we have gold right now at 43.25. And this is all-time high territory. And just let me see what that official number is for gold since I'm here. And let's see what the official all-time high of gold is. Okay, so we still got some room to go. 43.34. We still got some room to go. Let's make it. Let's see if we can get another $10 to surpass the previous all-time high. And once again, if you look out and you see what we're up against, this thing looks like it's starting to look like the Weimar Republic, the Reich to gold ratio. And of course, we know how that ended. And so once again, this is very interesting times. And then here we have silver. And we are off to the races as well. Looking like some Weimar Republic type stuff for silver. Nowhere near it because it's still $63. But the most important one happens to be centered around platinum, and I want to touch that. So let's just jump right in that one. And so literally last night I was watching and I saw that platinum touched an all-time high, and it is not an all-time high, but a 14-year high. And so what I'm referring to here is if the current price of 1844, you got to go back a little bit. You got to go back to September or October-ish of 2011 before we had this type of price action here. And the reason I think this is important because it paints a much broader picture as to what's really going on here. And as I started off talking about the quadruple metals, we got gold, all-time high, silver, all-time high territory, platinum, 14-year high. And then palladium. Let's see where palladium's at. See where it stands in reference to its all-time USD price. And so let me just zoom out. So as of right now, palladium is $15.95 per ounce. And if we zoom out, we still got a long way to go, because there was a period where we got up to $3,400 for an ounce of palladium. That was clearly an anomaly. And let's zone back to that one. And so that was literally what would appear to be a glitch, but then again, no such thing as glitches. And that was March 7th, 2022. So palladium has a lot more room to run, as you can see. So clearly, you know where and what appears to be undervalued right now. And so we got the quadruple four metals that's doing some big things. So, okay. So let's get into right now we have the S&P 500. It's looking slightly greenish, given that, oh, I'm sorry. Forgive me. It's just refreshed. So it looks like the S&P 500 is not popping today. And could it have anything to do with the fact that stocks are a little changed after delayed job figures paint weak picture of the economy? And so here's another point. This is not doom and gloom. This is just sentiment. This is what the metrics, the data that's given is pointing towards. Things are not looking hunky-dory. And to piggyback on that, when it comes to the political shenanigans, typically the current administration, whether it's Democrat or Republic, majority of their constituents as well as party tend to side with them in all policies and things of that nature. But this current administration is not really feeling 100% love. And what I mean by that is, here you have a chart from an AP poll, says only 56% of Republicans say the economy is good. And so that was done December 4th through 8th, and 1,100 participants shared their opinion. And so where's the other half of that? And it's good to say that number is going to decrease as we move forward. But let's get into some things here. So here we have payroll numbers. And once again, when I see these data points, I know everything is more so neutral, if not bullish for this administration, the fact that they're trying to paint a narrative as to what they want us to believe rather than what reality is. And so once again, as I always say, everybody knows somebody that knows somebody that experiences something that would paint a much different picture beyond what we're told. But when you just look at this number here, 64,000 jobs out of 354 million people, this is supposed to be impressive? I guess so. I don't know. But when the unemployment number ticks up to a 4-year high, it's hard to really keep the narrative that the economy is going good. That's the main point here. So payroll rose by 64,000 in November after falling 105,000 in October. So technically speaking, that's still a negative number because it didn't make up the previous month's losses. Delayed jobs numbers slow. And so just to piggyback off of some more analysis here, it says non-farm payrolls growth total. When you say growth, total seasonally adjusted 64,000 for the month, better than a Dow Jones estimated 45,000. Ooh. It says up from a sharp decline of 105,000. It says the unemployment rate rose to 4.6, more than expected, and its highest level since December 2001. A more encompassing rate swelled to 8.7%. So once again, unemployment's ticking up, CPI figures ticking up, and our economy is doing just fine. But then again, Besant and this administration is saying, just be patient, wait till Q1, Q2, wait till the dividends check comes, the tariff front refunds come, wait till. It's always a matter of wait till. What about the here and now? Because between now and then, it's going to be another narrative around, oh, this happened, so wait till the end of 2026 towards, yeah, you get my drift. You get the drift here, people. This is just what we're being fed. But let's keep it moving. I want to give you more. So my whole point is to highlight the false narrative and the breaking down of the narrative and how something has to give. And of course, precious metals is sniffing out something when you got 4 metals, 2 monetary, and other 4 industrial, the other 2 industrial primarily, are breaking out. Lets us know that, if something's breaking out, I mean, something underneath the surface is broken. And before I move forward, before I forget, I never know who's new to the community, so I got to make sure I try to do my due diligence to give everybody a chance to further educate themselves. And so, for those who have not, links in the description. Take the Silver IQ quiz just to better understand your monetary awareness and monetary literacy, and then take the quiz and share it with the family and friends so they can find out where they stand. It'll make it easier in you being able to help your family, friends, loved ones to understand what's happening and what they did not know about silver and why they need to know now. And my opinion would be to take part in this wealth transfer as we're going out of the, not necessarily the old, or this is being rebranded and we're being brought into a whole new monetary structure. So click the link in the description to take that, and definitely share your thoughts and your score with the community in the chat or comment section. Okay, let's keep it going. Just some more headlines here. I want to go through all these real quick. And so unemployment rate hit 4-year high in November as the economy added jobs. So think about that. Employment rate hit a high as the economy added jobs. So it sounds like an oxymoron. It doesn't even make sense. But then again, this is what's coming out from the mainstream media. Just think about that. Just think about that. Yeah, combination of words there. Okay, keep it moving. Here's another issue. Here in the Metro Detroit area, we have the big three. Where the automotive sector goes, the rest of our country ultimately will head. And so Ford Motor Company's been having issues for quite some time now, but a $19.5 billion EV write-down signals tough road ahead for legacy car makers. And so the fact that the previous administration was held pressed on making sure that every single manufacturer go towards electrical, it failed miserably. A lot of money wasted for nothing. And the fact that now it's a matter of things coming to a head where our manufacturing companies are not in good position for this upcoming year. And so it's good to say they're going to be leaning in on the government, just like this administration just stepped in on the farmers, gave them some aid. It used to be called bailout, but now I'll just say some aid to help the farmers. It's good to say the big three will be approaching the government for some aid as well in order to keep the remaining amount of jobs that they have available for their employees on the pay. Because as always, it's about share price of stocks for the investors at the expense of labor market, because the goal is you trim a little bit, it makes it appear on the stock market that you are making adjustments and growing. So more layoffs can be expected unless this administration steps in with some aid. So this is something we're paying attention to there. Okay, so let's just get on to the shift in narrative now. And so here is a article that I want to touch on because it talks a lot about what we're experiencing now. And for those who may not be aware or may not know, last night or the day before, the standard repo facility was tapped. And it's being tapped more frequently now that the reverse repo is, for the most part, drained. Therefore, the banks are needing more liquidity faster in that 24-hour window so that they don't affect the SOFR rate. And so here we have the Fed just made an overlooked decision that's even more important than its last rate cut. And so here, I'll give you the rundown on this one. This is we're going to be hearing a lot more about this one. It says the most important part of the Fed's last policy meeting is something that may have been overshadowed by the eagerly awaited rate cut. The central bank's decision to start, listen to this terminology. This is the new, not QE term, reserve management purchases. The RMP is what I'm calling it. A mouthful that essentially boils down to the Fed's expanding its balance sheet by purchasing short-term U.S. Treasuries is a big deal for markets. It says changes to the Fed's balance sheet often fly under the radar for many investors who primarily trade based on rate cuts and expectations for the path of monetary policy. Yet, the central bank's bond purchase programs have historically been an important tool for both influencing interest rates and as well as providing liquidity to the market. So, another way of saying, a nice way of saying, quantitative easing, providing liquidity to the markets. And so it's this liquidity to the markets that will kick off 2026 in a very problematic way, because majority of the liquidity is provided comes from the purchases of T-bills, and T-bills is what the Federal Reserve is up against, as you have the refinancing of close to $9 trillion due in 2026. So our government will be issuing more short-term debt for the sake of it being bought up by Jerome Powell and staff to provide liquidity, which is ultimately helping refinance our government debt. And so that's just one metric, one avenue that's going to be heavily utilized come 2026. And then this is something that you may or may not be familiar with. Let me bring it on the screen here if I can. Give me 1 second. Let me grab it here. So here is another tool that's being utilized. So over my shoulder here, you see these last couple of lines here. This is the last 5 years worth of activity. And so prior to all up in here, there was no activity because we had the reverse repo window where those were the extra liquidity that was brought into existence after COVID. But once that ran out, hence these marks, these new marks, we've had more overnight borrowing. So if I zoom in here, and so here, this is the new anomaly. So over my shoulder here, let me zoom in. This is what has taken place as of yesterday. So yesterday, while we were just living our lives, working, earning the currency that they are creating out of nowhere, this is what was brought into. This is what the banks decided to provide the Federal Reserve in exchange for a loan, overnight liquidity. And so for treasuries, it was $5.2 billion. And for mortgage-backed securities, it was $11.6 billion, totaling $16.8 billion. And so that was just one day. We haven't seen nothing this large since. Let me just take it back. December 1st of this year, it was larger, 25 billion. Because most people and most commentators I hear about focus on the treasuries, never the mortgage-backed securities. Mind you, we're still in a bubble somewhat when it comes to Fannie and Freddie Mae and all the bad loans that were taken out from the subprime era, which is still prevalent today because they are instruments that are financial products, mortgage-backed securities that literally right now are still someone else's liability. And so the banks, the too big to fail banks, hold the mortgage-backed securities. So they obviously need help with those when it comes to having some liquidity to handle those non-performing loans. And so treasuries is just one issue. Mortgage-backed securities is another issue. And so literally in December alone, you see all this activity here. Then you go back to this abnormally large in October 31st, where it was 40. No, I'm sorry. That was 50, a total of 50 billion. And so we're going to see a lot more of this activity heading into 2026. And so between the Treasury issue, mortgage-backed security issue, we have more than enough things. And those are all just the fiscal and the monetary side colliding on the back end. And it's going to get a lot uglier, in my opinion. And so reserve management purchases, or RMP, as Jerome Powell refers to them as, will only go up because that's the only way liquidity can be provided into the system directly to help the banks and to help cover the rear end of the federal government from all the debt that was taken out to the tune of $9 trillion. So what does that mean? Expect more liquidity, therefore more upward momentum in metals, especially because the world sniffs this out. The world know what's going on. And these are just the early phases of this as I call it, the last hoorah, because there's no unwinding this. There's no unraveling of this, because at the end of the day, the problem still persists and only grows larger. And the problem I'm about to put on the screen here is this: 38.4 trillion. So every time our government takes out or looks to borrow, it adds to this number here. And therefore, this 1.765 deficit will only continue to climb despite what we're being told about the tariff revenue. So literally this blue line here, this 370 billion is supposed to be the tariff revenue. This is what we're supposed to have taken in as of now, plus all the future promises of memorandums of, government's going to do this, companies going to do this, and all those things that are out, once again, out in the future. That wait, be patient. In the future, we're going to do this. The economy's going to be boom, and America's going to be great in the future. But once again, the math doesn't tell us that. While all along, look at the debt to GDP ratio. It's only going to go up. And right now, it's 121%, meaning if you were to look at the government finances as your personal finances at 121%, that means you're 100%. You're completely tapped out at 100%, meaning that your expenditures exceed your income. And now with that extra 21%, you're having to use credit cards on top of credit cards, on top of credit cards. You're using credit cards to pay off the interest of the previous credit cards you swiped. That's what 121 looks like. We're beyond a point of no return. And this is just the U.S. And I could and now that I think about it, if you look at, let me see if I can show you. If you look at other nation states, world debt cloud. Let's look at the world. This is what the world is experiencing right now. And the canary in the coal mine is set to blow any minute now will be Japan. And so as of now, Japan, their public debt to GDP, as you can see over my shoulder, is 295.96%, meaning their debt far exceeds any type of production, to the tune of being 3 times worse than the U.S. And so every nation state, for the most part, is up to their wazoo. We got the UK at 115%, meaning that they're using credit cards to pay the interest on previous credit cards. Italy, 163%. So literally, we got all these nations. Here we got Greece at 200%. So, yeah, debt is a primary issue, and there's no solution to it. And therefore, that's why I'm saying all this, because it's up to you to support and to protect yourself from this type of contagion event that's underway right now. And that's why I believe platinum, palladium, gold, silver, real tangible wealth preservation tools are sniffing that out. And so therefore, you're going to expect higher highs with very few lows in that area there. Okay, let's keep it going. I want to share some other things with you while I'm at it. So this is the primary subject matter. This is the most important part of what I'm about to talk about, I think, because I'm trying to give you some USD price comparisons based upon today and what we can probably anticipate Q1, Q2 of next year based upon the trajectory of gold and silver, platinum and palladium. So here on the screen, we have Besant. And so I pay attention to everything he says because I take it as a complete fabrication of truth. Therefore, he's going to tell you he's going to tell me in my ears what I want to hear for the sake of the markets responding favorably. And that in of itself lets me know that he's saying that because he has to, rather than what it actually is, right? What it is. So here we have Anthony Besant talking about the Supreme Court decision and the rate decisions, the tariffs, keeping the tariffs going. And then the excuse is, as it says here, Scott Besant warns Supreme Court tariffs ruling risks national security a loss for the American people. So once again, it's about the American people. This tariff unwinding, if it was to stop or the Supreme Court says unconstitutional, whatever, then it's going to hurt the American people. When in actuality, the tariffs have already done a good number on the American people because it's reflected in a sticker price of the things that you need to buy today. Okay, but I know he has to say that thing. But to his credit, he's doing what he's supposed to do to keep confidence in the markets. Now, this is where it gets very interesting and what I consider the most interesting. And let me grab it on the screen here. Where was it at? And where did I go? Let me go grab it again. Okay. So this has to do with the refund checks. And so our government appears to be excited that there's refund checks coming Q1. And so let me grab it. Let me see if I don't have the article here in front of me. Let me grab it again. But they're touting the amount of checks that households will receive as if it's going to be like some type of groundbreaking. We're going to be, better off than we were before type of thing. And that's where I'm like, okay, something doesn't smell right. And the reason I say that is because 1,000 to 2,000 is the same type of funds that was given during the stimmy world, and it did no good to nobody, but it juiced the markets, and all those funds flowed to the billionaires, in particular Jeff Bezos at Amazon, because he was a primary recipient. And so let me grab this here. So I'm not, let me see, where's the refund checks 2026, because I want to share a graph with you, and the graph will help you see things from a different perspective, I hope. Okay, so here is the article that I was going to talk about. I just found it. It says back home. Okay, they're messing with me here. They won't let me see it. They won't let me view it. Okay, let me try it a different way. Give me 1 second. Forgive me. I should have been prepared, but I thought I had it, but I didn't. But the graphic I'm going to show you will help you understand where the greatest bang for your buck will be at. Okay, I'll just grab this one. So here we have Besson expects taxpayers will see very large tax refunds early next year. Okay, so once again, very large sounds intriguing. Oh, what is very large? To each household his own. But if the threshold, as it says here, this is Besson. He says the bill, which referring to the big, beautiful bill, there was legislation in there. So Trump said American household will see very large refunds in the tax filing season early next year for following policy changes under the One Big Beautiful Bill Act. Then it says here, the bill was passed in July. Working Americans didn't change their withholdings, so they're going to be getting very large refunds in the first quarter. Besson told, I think we're going to see 100 to 150 billion of refunds, which could be between 1,000 and 2,000 per household. And so once again, ask yourself a question. Given the current increase of cost of living, health care, you name it, 1,000, 2,000 is crumbs compared to what would really be needed to really impact and provide more purchasing power. And once again, at the end of the day, they're using currency to manipulate and to weaponize for the sake of distracting and diverting attention off the underlying problem of a lack of purchasing power of the very currency we already have now. So if the currency we have now that we work for, whether how much you get an hour or whatever income streams, whatever, that is the currency that's being attacked through taxation and through inflation. And so to give us 1,000 or 2,000 or how much ever extra of our own expenditure. So the refunds come from tariff. Tariffs were spent from the people's pockets already. What they got back was already a tax on people and higher prices. So it's like getting a refund check is just already your work earned income. You just gave them too much and they're giving you back. Now they're giving you something that says extra, and he says very large, 1,000, 2,000. Okay, sure. What does that mean? So 1,000, 2,000 is crumbs. So the question is, it'd be worth your while, in my opinion, to take that 1,000, 2,000, or however much, barring your situations, if you have the ability to do it, because some people actually look forward to it, some people might need it for here and now bills. But if you don't, then I was able to take those figures, based it upon today's price action of gold and silver, and I came up with something that I thought would be a good way of looking at valuations of what the currency can purchase today when it's being redeemed for metals and what it might be able to purchase in the future. And so literally it's going to be a lot less than. Okay, what am I talking about? So here on the screen, we have what could 1,000 or 2,000 refund buy in precious metals today? That's the question. So looking at today's price, give or take, it's changed, a couple dollars here and there, but ballpark figures. This is where it gets interesting. So gold one day. So with a $1,000 refund check, you can only get 0.23 ounces or a quarter, a quarter of an ounce. And so that's very small, as you can see, but something's better than nothing. With 2,000, you can get 0.47. So as of right now, a little bit less than half. And this is based on today's price. So mind you, by Q1, February, March, whatever, April, gold is going to be at this current trend, perhaps touching 5,000. So take all these metrics with today's price. So my point is 1,000, 2,000 will get you more now than it will come next year, for sure. And then what's most interesting is silver. As of right now, 1,000 will get you, this is minus the premiums, my 1,000 gets you 15.9 ounces as of today, give or take, with 1,000. With 2,000, you double that, 31.7 at $63 today. At this current trend, the way silver is moving faster and harder and more, is more, with more vengeance than anything else, it's good to say silver by February, March could be 70, 80, who knows? So take all those numbers and chop them in half, roughly speaking, give or take. And then you got platinum right here. We got 0.55, so 1,000 get you half an ounce. Then with, as of right now, 2,000 get you 1.1 ounces. So you get an ounce and some change. And then last, let me move myself out the way. As you can see here, we have this one. And this is similar to palladium or platinum. You get 0.63 for $1,000 and you get 1.26 ounces for $2,000. And the reason I thought this was worth bringing to the forefront is because this is just with 1,000 to 2,000. If you were to get a refund check as of today and went out and took those checks or whatever and bought these metals here, and because buying them today with this current metric of how much weight you would have, come spring of next year, you would be better off having more purchasing power relatively available to you in dollar terms, having bought now than then, because you're going to get a lot more weight in the future. And so if people looked at their earnings, their currency, and their paper units as in the way of how much weight could you acquire if you redeem these, the amount of weight you're going to be able to get moving forward will only get smaller. And so literally at some point in the near future, the way things appear to be going, perhaps by May of next year, an ounce of silver may be $100, meaning that all the numbers I just showed you, the weight that you will be able to purchase just drops even further. And so this is like a different way of looking at this reset and the wealth transfer, because it's the metals that remain constant while pricing them in USD is what decreases. And so because of that, it's worth your while to continue to strap up with the physical weight, in my opinion. But once again, I'm just a man with an opinion. I don't know too much. But what I do know appears to be that things are shifting mightily fast, my friends. Okay, so let me just real quick here see if there's been any adjustments, and then we will go throughout the day. Keep an eye on the quadruple metals because they will continue to favor those that were wise enough to participate in acquiring them over holding just liabilities. So as of now, it looks like still in the green. Even though gold is being slammed right now, it's still in the green, give or take. And this is for this laugh and giggles. Let's take a look and see what Bitcoin is doing. Because once we get into more reserve management purchases, RMPs, as I talked about earlier, you better believe it's going to make its way to Wall Street, and Wall Street going to make sure that they divert it to the digital space. So this morning, Bitcoin was 86, got up to 88, and now it's hovering around 87. So that $2,000 swing is peanuts compared to where it will go once Larry Fink and Jamie Dimon are ready to cut on the spigot in that direction. So, yeah, very interesting morning. But we got bogus job figures. We have all-time 14-year high in platinum. We have RMP being unleashed officially, and we got the repo market being tapped for mortgage-backed securities and treasuries, and we got the government on the hook. It's going to need a lot of liquidity coming. So the whole premise is we ain't seen nothing yet because the spigot is just starting to drip compared to what the type of pressure and force is going to be needed when things really get kicked off. But anyway, with that being the case, my good people, if you haven't, make sure you hit that like button, show your boy some love, share thoughts, ideas, suggestions in the chat, and then also make sure you subscribe, hit that bell notification, and let's stay plugged in. But other than that, be safe, love, live, laugh, learn, and I appreciate you for your time and your presence. Shalom.